We are sharing our Q2 2024 results, which we published last month. Grateful that we are able to close the quarter with a strong performance as indicated in the numbers. But we have key fundamentals driving this success. Number one is the strength of our profile. Look at the capital, 1.9 trillion. Strong balance sheet size, which is the largest balance sheet in the market at 15 trillion total asset. We serve 5 million customers, which is 27% of the market share in terms of the balance sheet size. But this is also supported with a strong, diversified, and talented human capital with a split of 46 males, 54 female. Again, a very strong distribution channel with 251 branch network, 654 ATMs, over 24,000 agents, and 5,000 merchants across the entire country. So the other fundamental that is backing up our success is on the perfect execution of our strategy. As we communicated in the previous call, we started our 5-year strategy last year. This year is the second year of the execution of our strategy. We are proud to inform that we have successfully executed our strategy, and that reflects in the numbers that you have seen. The main pillars that we are focusing on is the reinforcing of our business, whereby we continue to elevate the customer experience, promote the operational agility and efficiency, building the resilience in terms of our financial by building up the buffer, and the strengthening the cyber security. On the second pillar of growing the business, we continue to diversify our business. We continue to forge our partnership and optimize on whatever opportunity in terms of the partnership that comes across. We continue also to optimize on the value chain reinforcing, and we continue to venture into new markets as we informed in the last communication. Last year, we started business in Congo. We opened 2 subsidiaries, the insurance foundation. We also opened the insurance business and the CRDB foundation. So to say, these subsidiaries have added and contributed significantly on the performance that we are reporting on. The last pillar, actually, we also associate with the success we are reporting on, is on the future-proofing of the business. We continue to accelerate our digital strength, build critical competence in terms of our human capital, and we continue to adopt and align our strategy with sustainable practice. The last point I wanted to highlight on our strategic pillar, we continue also to focus on the risk management, considering the market dynamics and the growth of the business. The second point that I just wanted to highlight that we associate with the success is the supportive operating environment overall, despite of what we see in the global market, where we are aware of the geopolitics tensions, the heightening inflation and the related interest rates, the forex challenges. The Tanzanian economy continued to be supportive, and really we have seen when you compare to the other markets, the region GDP has continued to expand relatively higher to whatever other markets in Africa. Tanzania specifically continued to experience a strong growth in terms of the GDP. We see similar challenges that we see in the other market, like the Forex, the interest rates, and then we see some of the regulatory heightening, but all these poses some opportunity which we have been able to tap in terms of the business growth, just being creative and innovative, coming up with the products and taking up the opportunity. But in particular, the Tanzanian market, you realize a lot of reform has been happening, which encourage foreign investments, but also attract some more regional trades. So all these have significantly contributed in terms of the performance that we are reporting on today. So we would like to highlight some of the key success stories that associated with the quarter we are reporting on. Specifically, when you look at our performance, the digital transformation has contributed significantly on the numbers that you see, particularly on the non-funded income. We see 95% of the total volumes happening outside our branches. And this actually adds on what we were informing you in the last call. Our investment on our systems has started to yield the results. Non-funded income, as you see in the next slide, has a significant contribution coming from the digital channels. And then we see more of the volumes and the more of our customers transacting on our digital platform. And that is coming from the stability and the capabilities that are associated with the enhancement and the investment we have made on our IT platforms. We continued to extend our services and reach the markets in areas where most of the time we had no business. Have driven the financial inclusion through technology and the digitization, new product in terms of the SME, MSCs. Mostly these are the underserved segment, automation of our solutions, reaching out the markets where the service were a bit stringent by digitizing through mobile, but also partnering with the other service provider. Insurance, we have been able to introduce the micro insurance for the motorcycles. We also reported on the Sharia compliant business in the last call. This segment has significantly continued to grow and attract attention in the market, and we have launched a number of products during the quarter. We also continued to focus on key segments like the women and the youth through our CRDB Foundation, where we have been able to reach out some of the markets that we otherwise couldn't have reached. We have done capacity building for over 17,000 customers. We facilitated about 540 million seed capital to the groups, mainly related to the women and the youth. And we have been able to issue new loans for over 1,700 beneficiaries. We continue to forge our partnership and engagements with the strategic partners. This ranges, you can just move. This ranges in terms of the local and the international partners. As you could see, we were able to sign up the partnership with the Propaco, the Film Development, the KFW, the European Investment Bank, the EIB. So all these intending to be able to tap on the international market in terms of supporting the business growth, but also supporting the trade finance business. Just move. So in terms of the financial performance, as highlighted, the financial performance backed up with the story I've just told. A strong delivery in terms of the financial performance. We closed the quarter with a strong PAT, 275 billion, which is 53% year-to-year growth. This is the highest growth in the market, and we believe we should be able to post a similar strong performance as we close the year. Total asset grew by 19%. As I highlighted, we closed with the total asset of around 15 trillion, 14.96, which again is the largest balance sheet in the market. Our loan portfolio grew by 24%, closing with a total loan book of 9.5 trillion, supported by the growth on the customer deposit, which grew by 15%. Year-to-year growth 15 to Tanzanian shillings 10.1 trillion. When we compare to the industry in terms of the key performance indicator, we closed with the NPL of 3.2. That is way below the industry average of 5.9. The return on equity, we closed with 29%, well above the industry average of 14. And our CAR efficiency ratio closed at 45, again, well above the industry average of 62%. So as highlighted in terms of the balance sheet, you could see the key driver of our balance sheet growth is mainly from the loan portfolio growth, which is 24% year to year. But this is mainly associated, as we see in the next slide, with the growth in the key segments and the key economic sectors. The total deposit grew by 15%. As you see in the next slide, it's mainly driven by the growth, mainly on the cheap deposit, the CASA, savings, and the demand deposit. And that actually gives more confidence in terms of the resilience of the funding of the balance sheet. Okay. So the portfolio split, as highlighted, we closed our portfolio split 53% in retail and 47% in corporate. As you could see, well diversified over the key economic sectors, consumer lending being the highest portfolio at 36%, the agri sector 19%, and the trade 13%. So you could see the diversification well maintained across the key economic sectors in the industry. The next slide tried to highlight in terms of the portfolio quality. As I highlighted, we maintained our NPL at 3.2, but mainly the NPL we see is contributed by 53% in corporate and 47% in retail, well explained by the portfolio split as highlighted. The agri portfolio contributes the highest percentage in terms of the sector, trade contributing 28%, and the consumer lending 16%, well aligned to the portfolio distribution that I've explained from the previous slide. In terms of the funding, as I highlighted, we closed the quarter with 82% of our deposit in CASA. And this is actually confirming the strength in terms of the funding composition. The biggest percentage of our funding is coming from deposit, And as seen in the next slide, in terms of the deposit composition, just move to the next slide, 69% of our total funding is coming from deposit, just slight increase in terms of the borrowing, as we reported in the similar quarter last year. The funding cost, the funding mix increased to 18% from 16% we reported with, just in line with the growth and the expansion of the loan book, and just in line with what we see in the market in terms of the M3 growth, which is slightly below to what we see as the demand of customer credit supplies. So in terms of the overall liquidity, we closed with a strong liquidity position at 27%, well above the regulatory liquidity ratio, which is 20%. So the next slide, just highlighting in terms of the P&L, I already have highlighted about the profit after tax. We closed with a strong profit after tax of Tanzanian shillings 275, which is 53% year-on-year growth, mainly backed up with a strong growth in our top line. Our net interest income grew by 35% on year-to-year on the strength of the growth of the interest income, but also the containment of the interest expense, which grew by 16%. So as you could see at the bottom, our NIM improved from 7.6%, 7.9% in similar quarter last year. And as we are closing the quarter, our NIM was at 8.6%. And that is coming from the strategic initiative we undertook in terms of the portfolio diversification, but also aligning our portfolio pricing in line with the trends in the market, as we had informed in the previous course. So our non-funded income also recorded a significant growth, 24% on year-to-year. And as we'd see in the next slide, the main contributor is coming from the digital channels. Our operating cost remained at 18%, despite of the full operation of our three subsidiaries. We are able to maintain our growth of operating cost at 18%, which is an acceptable level. So I would like to highlight in terms of the contribution of the non-funded income, as I have highlighted, 70% of the non-funded income is contributed by the fees and the commission, and the 50% of the non-funded income is coming from the digital channels. And as I've highlighted, we significantly see good contribution from our digital channel volumes. As you could see, agents banking is contributing about 31%. SIM banking with the highest contribution of 50%, or 53% of our total non-funded income from the digital channel. And in terms of the year-to-year growth, SIM banking has the highest growth of 31%, 22% on year-to-year coming from the agents banking, ATM growing at 21%. So this actually explains better where are we seeing the biggest growth, and we continue to see more volumes, as highlighted in 97% of the volumes just coming from transactions outside of our branch. And that is actually reflecting the impact on the investment we have done on the digital touch point, but more of the initiative to activate the usage of our customers over the digital touch points. Our cost to income ratio closed at 45% compared to the previous quarter, where our cost-to-income ratio was 46%. And that's actually a clear evidence of the results of our strategic initiative in terms of improving our efficiency. We continue to review our process, automate process, and pushing more of our volumes on our digital touch points. And the data actually continue to yield the results. We continue to see more improvement as we complete our mission critical system implementation in the coming quarter and the coming years. So in terms of the capital, we continued to maintain a strong capital position, closing the quarter with the total capital 15.8 and the tier 1 capital of 14.4, well above the regulatory capital requirement and adequate to cover our business growth. So I would just like to touch on the subsidiary performance. As I highlighted, a strong performance in our subsidiary, and they continued to post a positive contribution on the group performance. Overall, the subsidiary post 5% of the group PAT. Burundi making a biggest contribution, closing with a profit after tax of 18.2 billion, which is 78% year-on-year growth. Just to inform, Burundi is now the first profitable bank in Burundi. We have been operating in Burundi for the past 12 years. Happy to report on this development. And as we had promised, we are ambitious to be the undisputable leader in the market. We have delivered in terms of our profit contribution in Burundi market, and we look forward to see more contribution from this market. Congo continued to perform well. We see more business growth. Congo posted a loss of 5 billion, well in line with our projections because it's just a startup, similar to insurance, which just started more or less at the same time as our Congo subsidiary. But we are confident both of our subsidiary are going to Congo is going to break even within a set timeline, and our insurance subsidiary, we are confident, should be able to break even starting this year. So I would like to briefly take the last look on this slide in terms of the performance of our stock in the stock market. We have seen significant improvement in terms of the performance of our stock in the market, 10.6% on year-to-year growth, closing with the stock price of Tanzanian shillings 520. Happy to report that yesterday we closed with a high of 700. I believe we should be able to see more investors' confidence as a result of the performance. Thank you. I'll just stop here and hand over back to Anna for the next discussion.
All right. Thank you so much, Fred, for that insightful presentation. Ami, I think for now we'll hand it over to you for the Q&A session. Asante.
All right. Thanks a lot, Anna. Thanks a lot, Mr. Fredrick. Your time is valuable, and thanks for your presence. And actually, congratulations on these stellar results. Mr. Fortius, I know you are one of the gurus around when it comes to financial analysis, looking into banks, observing their financials, and you've been quiet since this session have started. What's your comments on your end?
Thank you very much, CRDB team, for this splendid performance. And of course, we have seen the reaction of the market. Investors are optimistic about your performance. That is why they're just flocking in to buy CRDB shares. And maybe what I would like to ask you from CRDB team, some comments on some few issues. Because we have seen the past 3 years, we have seen a kind of credit growth, the credit boom. Loan book almost doubling for the past 3 years. Now, from the history, normally during this period, what follows normally is the downturn. So I would like to hear from CRDB, what are they saying? Is this will be sustained for a few more years, or and of course, normally during this kind of period, some credit standards are normally relaxed. So I want to get the assurance from CRDB, what is the position? And another issue is on the loan to deposit ratio, which is on the 90%. And I have seen NIM with net interest margin improving. Now, as you are aware, Nshekanabo and Anna, this year we have seen influx of a lot of collective investment schemes, money market schemes, which normally go into eating in the same client base. How do you see this NIM going forward with these capital market products, which will be tapping on the same client which you have been enjoying lower savings rates? And my other point is on the ESG. I think you are one of the bank which has issued a green bond. Do you see sufficient number of green projects or people coming to borrow on this angle? If there's sufficient number of green projects. And my last point is on if you can share the significance of Basel III, because we have some investors who are just wanting to know the significance of this Basel III regulation on the banking sector and what will be its effect going forward. I think for the moment, I would like to hear from CRDB team on these points. Maybe later I can add something if, depending on what the response will be from Nshekanabo and Anna. Thank you, Ami.
All right. So to our dear listeners, one thing I should let you know is that you can write your questions on the chat so that they could be voiced to Mr. Nshekanabo and Anna Mwasha from CRDB. But before we move further, we have somebody, because we have the issuer, Anna Mwasha representing CRDB and Fredrick from CRDB. But also, we are the intermediaries, I and Fortius, but we also have an investor here, Mr. Abbas. Kwa mara kwanza katika hizi session, tunamleta mwekezaji. And Mr. Abbas has an interesting story with CRDB kwa sababu he's among those guys who came in CRDB when it was trading around the 200 club, and he's about to celebrate the 700 club today, soon. Hopefully the market aligns with this celebration. Yeah? Mr. Abbas, karibu kaka.
Asante sana Mr. Ami. Mimi nitazungumza Kiswahili kidogo kwa sababu naamini participants wengi wanaelewa Kiswahili. Kwa majina naitwa Abbas Mvuli, kama nilivyotambulishwa. Mimi ni mwekezaji na kwa asilimia kubwa uwekezaji wangu umekuwa nikiufanya katika benki ya CRDB. Napenda kuchukua nafasi hii kuwapongeza sana management ya CRDB, staff na watu wote walioshiriki katika kuleta performance nzuri, kusema ukweli, kwa sababu inatuletea value sisi wawekezaji sokoni. Bei ya hisa imeweza kutoka shilingi 460 mpaka kufika 680 mpaka 700. Growth ya almost 48% ni growth nzuri sana. Mimi nilikuwa na maswali machache kwa management. Swali langu la kwanza, katika non-performing coverage ratio tumeona imekuwa ikipungua kuanzia kwenye mwaka 2022 kwenye audited report, non-performing coverage ratio ilikuwa 80%, lakini kwa hii half year iliyotoka sasa non-performing coverage ratio imeweza kushuka mpaka kufikia 35%. Je, management ina mpango gani katika kuweza kuhakikisha tunakuwa na provisions za kutosha katika kuweza kucover hii mikopo chechefu? Na swali langu la pili, tumeona kuna growth kubwa kuanzia Q1, growth ya profit after tax imeweza kufikia mpaka 53% kwa half year. Je, hii growth ni endelevu? Management wanaonaje hii growth? Sisi kama wawekezaji tutegemee ni growth endelevu kwa nusu mwaka unaokuja na miaka inayokuja, au ni kitu ambacho kimetokea once? Lakini pia tumeona kumeanzishwa subsidiary mpya ya Congo na Burundi, tumeweza kuperform vizuri mpaka tumekuwa ni number 1 profitable bank. Je, management ina mipango gani katika kuweza kufanya subsidiary ya Congo iweze kuwa ni profitable subsidiary? Kama ambavyo tunajua Congo na sisi Tanzania tuna biashara nyingi ambazo tunakuwa tunafanya pamoja. Asante sana.
Asante sana Abbas. Mwasha, Fredrick, the stage is yours.
Thank you. Asante sana Ami, and asante sana Fortis and Abbas. Nianze labda na Fortis. Growth in loan book. The growth in the loan book, as we shared in the previous course, you realize we are coming from a catch-up growth. Remember, last year we were in the 30s year-on-year growth. You see this year, the growth is easing. And as we had shared in the outlook, as we close the year, we'd see this year-on-year easing, and likely to set out in the ranges of 15-18%. You see half year, this year-on-year growth in terms of the loan book, 24%. The catch-up growth, as I highlighted in the previous call, is coming from the post-COVID and the disrupted supply chain and the delayed project due to the COVID impact. Post-COVID, you could see a lot of projects were actually having the catch-up funding requirement, and each one was just rushing to complete the project, but the supply chain opened up and everyone was trying to catch up. That's a growth on trade finance, but also growth in a lot of credit extension. And that is similar in a lot of the economies, though the growth that you see in our industry is relatively higher, but we project and we foresee to see this growth settling back to the range of 15% as you see in the outlook. So it is actually in line with what we see in the dynamics and the development in the economy, and we are confident that we should be able to see an average growth settling to that range. In terms of the NIM, 8.6 is explained with what we communicated. We continued to review our portfolio mix in terms of corporate retail, but again, aligning our portfolio pricing in line with the interest rates in the market. You realize, as we are reporting in the previous similar quarter last year, we were updating on the strategic initiative we took after realizing the heightening interest rates in the global market and then the local market. And actually that also answers what Abbas has highlighted. We see the interest rates in the market continue to increase. The T-bill rate 20 years, 25 years above 15. 1 year, again, you could see where they are standing. But nevertheless, we continue to source the funding from the cheap funding source, including the local market where you see our CASA continue to strengthen, but also sourcing the funds from strategic partner, and in particular now aligning our funding maturity, because most of these funds we are going to fund the long-term project, which are capital investment related, going to manufacturing, going to some of the construction of factories. So, and the others going to agriculture. So in most cases, you realize we opted to go to the long-term funding from strategic partner. And that's a growth of the borrowing that you are seeing in our balance sheet. So as you see, our NIM closed at 8.6. But Fort, you raised a valid comment in terms of the collective schemes. We see upcoming collective schemes, liquid funds, all these actually, and we see some of the schemes coming from the MNOs. So nevertheless, our ability to grow the business in the market and the focus on the financial inclusion continue to actually to mitigate the challenges, because we are now raising the funds from the markets that we used not to see customers enjoying the financial services. Just one of the story, if you look at our expansion in the agents banking networks, the deposited volumes that we are seeing from the agents banking network actually significant to cushion the impact that we see, because despite of these schemes, but we still see more of the potential in terms of the financial inclusion, and the more of the players are still not having the access of the financial service. So we are confident, yes, they are increasing schemes, but we have not tapped, we have not potentially tapped or exhausted the entire market, and we are confident we should be able to see with the expansion and the distribution network we have put in place, we should be able to mobilize more cheaper deposit despite of the growing of the collective schemes in the market. Green funds, yes, we reported on the green fund from the GCF. We see more of the projects which are qualifying for green financing. We have completed the policy and the regulations in support of the IFC, and we see more of the pipelines. We should be able to disperse our first tranche coming this quarter. We already have about 49 billion in pipeline, which is due for disbursement and finalizing the initial. But just to inform, we assess the total portfolio, the existing portfolio, understanding it is a process to qualify and onboard the green project. But the good thing is we have had a very strong support from our strategic partner, including IFC, to make sure that we put up the right framework and ensure we are able to onboard the right customer and the right project that qualifies for the green funding project. The total fund that are due for disbursement is $200 million US, which is a 50% match funding, 100 from GCF and 100 from CRDB. So in terms of Abbas' question, congratulations, first of all, Abbas, and thank you for being and giving a very strong testimony on CRDB stock investment. We look forward, you'd see more positive. Yajayo yanafurahisha. The NPL coverage ratio at 35%, yes, it is the area we continue to focus, as we reported in the last quarter. This is mainly contributed by three major corporate customer, and mainly in agriculture. They slipped in the NPL as per the regulation. Once the customer slipped in the non-performing loans, there is a cooling period, which requires 4 consecutive quarters for him to move out. We continue to close monitor this customer. Should this customer be excluded from the non-performing loan, you should see our coverage ratio above 70%. And that's where we would wish to see our coverage ratio. In terms of the profitability, thanks for the appreciation. We are confident we should continue to see a strong performance in terms of profitability. As you see in the highlight, we are optimistic we should be able to close the year on the growth trajectory that you see in line with the current trend. As we are sharing our projections at the start of the year when we had a call on our 2023 numbers, the outlook was clear. We are optimistic on our capability to drive and grow the business, and the leverage on the investment we have done on our system and the infrastructure and the distribution network, our portfolio growth and diversification, our investment in process improvement, and the digitization. We should be able to drive the performance to the level you are seeing to date. But most important, the execution of our 5-year strategy. As highlighted, this is the second year. We continue to have confidence in terms of the operating environment and the regulatory environment, thanks to the central bank. So that all put together confirms our capability to deliver the numbers in line with what you see. Our Burundi contribution in terms of profitability, thanks for that. Congo performance continue to shed a positive trend. We are now fully operational in Congo. We have put up the right infrastructure, and this year you would see more 3 branches open. We are operating with 1 branch in Lubumbashi. We'll be opening other 3 branches, 1 addition in Lubumbashi, 1 in Kinshasa, Karemi, and Bukavu. So you should see our business expansion in additional 3 major cities and 1 branch in Lubumbashi. So confidently, we see more good trend in terms of the Congo performance. And we see it on track, and it will be breaking even in line with our projections. Similar to the other subsidiary, insurance subsidiary, we are optimistic that it should be able to break even in this current year. So I think that covers what were the questions. I would hand over back to Ami.
Fred, labda kabla you take it back to Ami, naona kuna maswali hapa kwenye chat. Kuna moja ameuliza what our book value is. As at half 1, that's the June tulipofunga nusu mwaka, the book value was 730. Kwa hiyo our share is still trading at a discount as of now, because the book value is 730. Kuna swali limejirudia kwenye chat kuhusu LDR, kwamba it's a bit too high, it's a bit too aggressive. Are we comfortable with it? Na tuna mpango gani kuimudu? I think, yeah. Terrible.
The LDR, yes, it's high, but it's not it's actually one of our strategic area of focuses where you see the deposit growth, 15%, and that's the highest growth in terms of the market. And when you look back on the M3 expansion, but why do you see that? Is mainly, as I told, the catch-up growth. We see more of the demand of the funding or the credit supply demand compared to the funding side. On the funding side or the funding supply from the local market. So for us, seeing the opportunity, we sourced the fund to support the local business growth in line with what we see in the economy from the borrowing. So that says a lot in terms of our capability to mobilize the fund and the support the business growth from our strategic partner. And that's where I reported the growth in terms of the borrowing. When you look at the funding structure of the industry, it is not only CRDB. Yeah. It is the industry, and that's coming from what I've highlighted. There are more demands. The economy has been enabled, and there is more opening. I talked about the attraction of the investors, unfolding of the business growth from the government initiative. We have seen the government reforms to support the business growth. So we are taking that opportunity. So from the regulatory point of view, the LDR is not capped, and that is actually where we see supportive environment from even the central bank, where they see the opportunity, they see the funding requirement to support the growth of the economy. And that's the ratio is not a regulatory. It previously used to be at 70%, but with the key project and looking at the market where you have long-term funding requirement, and mostly the local funding are short-term. So you'd have the funding gaps and the maturity gaps, which often come to be filled in by the long-term funding with the strategic partner. And that's what we have done. And that's why you see the growth in the loan book in line with the opportunities that are in the market compared to the supply or the growth in the M3. But most important also to note in this quarter, you realize despite of preserving our liquidity position, but the market liquidity was not unfolding to in line with the supply, the demand in the supply of credit.
Senator Fred, there's one more question, Tauliza, from the chat before I hand it over to Ami and team. Foreign currency loans taken by the bank with rates starting to go down, global policy rates. How resilient is the book to handle the movement? Have we hedged the interest component of these foreign currency loans? Kwanza, what percentage of our book is in foreign currency? And then how mpango wetu ukoje?
Thank you. The foreign currency book is now standing at 26%.
Okay.
And then quite exciting is the initiative that we took from the last year when we saw the escalating interest rate on the global market, affecting even the pricing in the market. The good news is we have seen the Fed continue to improve in terms of the pricing in the global market. We look forward this to improve, despite the easing might not be immediate, but we see that as one of the key challenges in terms of the funding. But nevertheless, what we did, the foreign loan book is put on the floating rate. So each time you see the change in the foreign market, our book often would reprice in line with the movement in the global market on the basis of the change in the global interest rates. So we have 26%. The other part that we do is we have continued with our engagement with our customer. For those who had no floating interest rates, we have continued to engage the customer and make sure that we are able to put them on floating. So the repricing is paying, and you see the improvement on the NIM to align the exposure we have in Forex in line with the movement of the interest rates is yielding the results. And again, we continued to engage the strategic partners, particularly the foreign funders, in terms of sourcing more long-term funds compared to the short-term funds, because when you go to the short-term funding platform, the funding costs are relatively higher compared to the long-term platform. And you may talk of the Lombard, and qualifies the longer term, qualifies for the liquidity management, the liquidity computation as per the regulation. So I think that answers that question. Back to Anna.
Asante Fred, I think that is it from the questions on the chat. Ami, maybe if you have more questions on your end.
On my end, I love focusing on the future because you guys have answered all the questions really well. And I think our investors are quite excited about the stock. Hence, their reaction post the results. Nadhani it has been one of the most exciting years for investors. Sasa, we go to that magical question. What's the outlook? What's the future like? Itakuwaje?
Yana neema. Yana neema.
Nafahamu walio wengi hapa wanasikia Kiswahili. Yajayo yana neema na yanafurahisha. The future is very bright and exciting, and on the back of the macro economic environment support, but also on the back of our ability to execute our 5-year strategy, but also on the back of the infrastructure, the investment we had. Thanks to the investors for enabling us to do that. In terms of the outlook, when you see, as I highlighted, in terms of the loan portfolio growth, we'll be descending from the catch-up growth. We see loan book growth settling at around 15-18%, deposit 16 to 25%, and that posts confidence in terms of starting to yield on our network distribution and our ability to reach the markets and where we see most of the population financially excluded. Non-funded income will continue to grow at in the range of 35%, 40%. I just indicated our ability to grow the non-funded income, mainly supported by our digital network capability and the investment that we have so far done. Just to highlight and share the confidence on this, we'll be completing the implementation of our core banking system by the end of the Q4, and the last ones will be completed in Q1 2025. So that confirms our ability to drive our non-funded income and drive the volumes. Our cost-to-income ratio is projected to close at 43% to 47%, and return on equity 25% to 30%, return on asset 4.5 to 6.5, and our NPL in the range of 2.5 to 3.5. So that confirms our statement on yajayo yanafurahisha. In terms of the last slide, just on the way forward, we are confident how in terms of our ability to execute, as I said, our 5-year strategy. We continue to maximize our digital platform on the back of what I've highlighted in terms of our system capability and improvement. We continue to focus on maintaining superior customer experience. Our focus is mainly on the customer And all the investments we are making in terms of people, process, and the systems are just centered on making sure that we continue to deliver superior customer experience. We give priority on the key segments in the market, the SME, MSCs, agriculture, the youth, and the women. And these are the powerhouse of our business growth. So we understand the market dynamics and the risk trails. We continue to focus on the risk management. I didn't particularly mention the cybersecurity. That's another area of our attention and our key investment area to make sure that we are able to prove our system and our control environment. With that, I'll just stop here and thank you, Ami, thank you, Orbit, and all the investors on the call. We really value your time. We keep you updated on all our development. And just to welcome everyone on our marathon. Jeshi letu la kusambaza tabasamu limeendelea kufanya kazi kubwa. Tabasamu hili, we have been able to put it across the border. The past 2 weeks, we have done a successful marathon in Congo, successful marathon in Burundi, which was last Sunday. This Sunday, we are now back home. We welcome you all. For those who have not subscribed, still have the last window. For those windows which have not closed, we look forward to see you on the run inayosambaza tabasamu. Jeshi letu la kusambaza tabasamu liko tayari na maandalizi yako vizuri kuhakikisha kila mmoja anasambaza tabasamu. Asante sana.
Asante Fred. Ami, asante sana. Over to you.
Yeah, asante sana Mr. Fredrick. Anna Mwasha, once again, asante sana. Mr. Fortius, nadhani politely Mr. Fredrick ametuambia tuonekane kwenye hii marathon. Make we've been absent. So tutafanya our best, we will show up. We will show up. Tutaanza mazoezi ya awali kabisa, mambo yasiwe mengi.
Ami, kuna kilomita 5 za kutembea, sio lazima ufanye 42, hata kilomita 5, 10 zipo.
Nadhani sisi na wawekezaji wetu, we will show up na hili jeshi la tabasamu na sisi tukatabasamu. Last thing, because we had other stakeholders, kwa niaba ya wawekezaji, Mr. Abbas, can you just close, wind up, toa neno kwa wawekezaji wenzako, probably neno kwa CRDB, then tuanze na weekend.
Mimi nashukuru. Neno kwa wawekezaji wenzangu, tumesikia performance nzuri kabisa kutoka kwa benki nzuri ya CRDB na wametuahidi yajayo yanafurahisha. Basi ikifikapo Jumatatu twende tukafanye yetu sokoni, tununue hisa kwa wingi, kwa sababu tunaona performance inakuwa nzuri na tunategemea performance itakuwa nzuri zaidi. Subsidiaries imefunguliwa, tunategemea itafanya vizuri, na tumesikia hapa kuna more branches zinafunguliwa. Kwa hiyo yajayo yanafurahisha kama alivyosema, na kwa management tunashukuru na tuna appreciate uwezo wenu na performance yenu. Mnaendelea ku create value kwa sisi wawekezaji ambao tunawekeza katika soko la hisa, specifically kwenye benki ya CRDB. Tunaomba muendelee kukaza buti ili tuweze kuona performance nzuri zaidi. Asante.
Asante sana, tunashukuru Abbas. Na Abbas, tunakusubiri Jumapili.
Jumapili nipo tayari kabisa, nitaonekana hapo kwa kilomita za kutosha kabisa, kwa sababu mimi ni mtu wa mazoezi, kwa hiyo haina shaka kabisa hilo.
Asante sana.
Asante.
Mr. Fortius, kwa niaba ya analysts, the technical guys following this talk, welcome sir for your final remarks.
Nashukuru sana Ami for moderate session, and thank you very much Mr. Nshekanabo and Anna Mwasha CRDB team, and of course we kama unavyojua analyst wanakuwa more, sio kwamba wako negative, isipokuwa wako more critical kwenye any information ambayo unakuwa na share. So we are looking forward to see your promises materializing so that they can manifest or benefit from the investment. And of course, as you have explained that you are expanding your wings to DRC, one of the unbanked region in the African continent with a lot of potential. Kwa hiyo kwa kweli mkisimamia vizuri hiyo, sitaki kusema mengi, wasije akasema na washawishi watu wanunue CRDB, lakini we'll be looking very closely to see how you unroll your strategies in the region. And tunafurahia sana kuona ni CRDB inaanza kutanua wings, kwa sababu tunaiona ni benki ya Kitanzania. Kwa asanteni sana, tutaendelea kuwafuatilia. Kama kuna chochote tutakuwa tunakuja kuwauliza maswali. Asante sana, na niwashukuru sana wasikilizaji wetu wote ambao wameshiriki kwenye hii call, na niwatakie weekend njema. Asanteni sana.
Asante sana.
On behalf of all the participants, naweza nikasema tunashukuru sana kwa hii session. Anna Mwasha, again Mr. Fredrick, muda wenu uko quite valuable, na asanteni sana kwa kuamua kutupatia huu muda wenu, especially on a Friday evening. All I can say ni weekend njema, maandalizi mema ya marathon. We shall catch up and let's keep on observing the market, kwa sababu it has been really exciting every day. Ikifika saa 10 we rush kwenda kuangalia CRDB, is it pushing 10 shillings higher? So let's wait for that 700 club, all our investors and the management, as we enjoy the fruits of our labor through investing. Weekend njema, asanteni sana.
Asante sana.
Asante sana.
Thank you.